Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hello. You love investing. We know this. That's why you're here and listening today. Thanks so much for stopping by the way. Today, we talk about 5 ways to invest in real estate in 2022. First, a quick word from our sponsor. A credit union that offers Bitcoin? Give me 5. For a limited time only, get $5 of free Bitcoin through the Southland Credit Union app. Enrollment is quick and easy. There's no hidden fees, and you can conveniently fund Bitcoin purchases directly from a Southland account. Claim your free Bitcoin today by going to thecollegeinvestor.com/Southland. Bitcoin accounts and services provided by NYDIG. Not NCUA insured. Restrictions apply to Bitcoin bonus. See terms. And don't forget to check out thecollegeinvestor.com/Southland to sign up. So maybe at this point in your investing journey, almost all or nearly all of your money is in the stock market. You know it's important to diversify, but maybe you're not sure if real estate investing is right for you. You might think it requires a lot of money up front, or even requires a lot of work ongoing. Okay, yeah, some of that is going to be true, but there are some new options this year that can make real estate a potential investment for you. Check this out. While real estate investing certainly isn't for everyone, it can be extremely lucrative. Many people have made millions investing in real estate, sometimes even billions with a B. So if you're wanting to expand your investment horizons, here are 5 different ways to invest in real estate. Number 1, invest in a bigger real estate deal. One of our favorite options for investing in real estate is joining with others to invest in a bigger deal. This can either be commercial or residential. There are 2 great things about investing in a larger real estate deal online. Number 1, low minimums. So depending on the platform you use, you can actually invest as little as $500 and be a partial owner in a property. 2, you don't have to be an accredited investor. In the past, to participate in these types of investments, you had to be an accredited investor, but that rule has gone away for certain types of investments. As such, if you're looking to diversify your investments but maybe you don't have a ton of money to do it, this could be a lucrative way to start. We recommend 3 different platforms for investing in real estate. Fundrise. So Fundrise is a real estate investment trust or REIT that allows you to invest in a basket of real properties. As such, you get a little diversification on your real estate investment, plus you can get started for like $500. If you want to find out more, we have a full review of Fundrise and links to find out more as well at thecollegeinvestor.com. The second platform we recommend, Realty Mogul. So Realty Mogul offers investors a variety of properties to choose from, including residential, mixed use, commercial, and retail. They don't charge their investors fees. Instead, they place that burden on the property holders. Nice. Investors can start seeing a return just a few weeks after the project is funded. We are actually partners with Realty Mogul and think it's one of the best platforms out there right now. Find out more, of course, at thecollegeinvestor.com. Streetwise. The REIT in the middle of the word is spelled like REIT, or Real Estate Investment Trust, like we talked about earlier with Fundrise. This is a newer private equity REIT that focuses on cash-flowing real estate investments. One of the better fee structures available too. You're open to both accredited and non-accredited investors. You can check out Streetwise as well inside this article at thecollegeinvestor.com. If you're curious about more options, we compared all of the major real estate investing sites as well. Let's take a look at number 2. Buy a rental property. Purchasing homes and renting them out is a fantastic way to produce extra monthly cash flow. To do this, you have to purchase a house that has a combined monthly mortgage payment, home insurance payment, and property tax payment lower than the rent the property commands. There are several ways to do this, by the way, from buying in an area with high rents to putting a lot of money down so that your mortgage payment is low. But one of our favorite ways to do this online is with Roofstock, where you can buy single-family rental properties that already have tenants and cash flow easily online. Yeah, there are two downsides to owning a rental property directly. The first one, it typically requires a lot of cash up front, from the down payment to the maintenance required. You really need to assess whether your return on investment was actually going to be worth it. The second major downside of real estate is dealing with tenants. You'll need to screen renters before letting them move in. You're also bound to hear sob stories at one point or another, so you're going to have to learn to be firm with renters. If you're the type to easily give in to people, you might be better off letting a property management service oversee your rental properties. Either way, there's going to be ongoing work required. Depending on who you talk to, rental properties can be very lucrative. And if you do the upfront work of finding those hidden gems, you can let a property management service do the rest, and rental properties can be a form of semi-passive income. Number 3, you've heard of this one, flipping houses. Flipping homes can be a bit risky, but also extremely rewarding. And since property values are back on the rise, this is a good time to get started flipping homes. Flipping a house is the sum of purchasing homes under market value, fixing them up, and selling them for a profit. But to be a successful flipper, you need to hunt down those bargain homes. The less work you have to do, the better. The ideal flip home would be one that only needs minor cosmetic repairs. You could then make the home look more aesthetically appealing and sell it for a profit. When you decide to flip some homes, you do have to prepare yourself for the possibility that the home may not sell fast or for much of a profit. You take a big chance when flipping homes, which is why you have to pay special attention to the home's location, needs, and price. However, if you have the knack for flipping houses, you could find this to be one of the best investments you've ever made. You can check out an amazing guide we have to flipping houses with little money down at thecollegeinvestor.com. Let's take a look at number 4 on our list today of 5. Rent a portion of your existing home. Maybe you're not sold on the thought of purchasing a home only to recoup your money little by little. You could first test the waters by renting a portion of your own house. You have a couple of options to do this. First, you could rent a spare room in your home, or you could rent the basement. If you're yet to purchase your first home and like this idea, you could even buy a duplex and live in one apartment and rent the next. The advantages to renting a portion of your house is that you get to watch your tenant closely. It's less likely that a tenant will try to stiff you for the rent payment when you're in the same household. Renting a portion of your house also gives you the ability to get a feel for kind of what it's like to be a landlord without making such a huge monetary investment. We have a friend, her name is Michelle, who recently wrote about renting a room to a stranger, which is a great read if you're considering this option. And the last one, real estate investment trusts, or REITs. If you think real estate is a great investment, but maybe you don't really want to get so hands-on, don't blame you. You could take your real estate investing to the stock market. Real estate investment trusts, or REITs, are great ways for you to invest in real estate without actually being actively involved. A REIT is a fund that is set up to invest in mortgage instruments, bonds, and stocks in the real estate niche. There are a few different types of REITs: equity, mortgages, and hybrid. An equity REIT invests in properties. A mortgage REIT invests in mortgages. And a hybrid is, of course, the mixture of the two. All three typically offer high yields. Basically, you get paid back from the interest others are paying on their mortgages. If you're strapped for time, investing in REITs is probably the way to go. Some of the more popular REITs include American Capital Agency, which is NASDAQ AGNC, Annaly, ANNALY, NYSE, NLY, or Realty Income, NYSE-O. You can invest in a REIT at your favorite broker, of course, but we recommend both Fidelity and TD Ameritrade to do this. Okay, so what do you think? These days you can invest in just about anything, and you should do what feels right for you. Personally, I love real estate, but I know not everyone else does. If you've been thinking about trying your hand at real estate investing, it's good to know that there's more than one way to go about it. Nevertheless, it's important to do your due diligence before beginning with any new investment. And that is our show for today. Thanks again for stopping by. We hope it was helpful. And I know I mentioned a ton of products with a ton of links and reviews and all that stuff. You can see everything inside this article. Copy and paste the title of the podcast right into the search bar at thecollegeinvestor.com, and you'll find it. You can follow us all over social media as well. We'd love to get to know you. Just search for The College Investor. Thanks again for stopping by, and we'll talk to you again real soon.